It is called Singles Day, and it's essentially the Black Friday of China. So, what can we learn about consumer demand post pandemic from 11/11? For more, we go to Brian Tycangco of True Health Opportunities China. He joins us now from Manila, Philippines. Brian, thanks for coming by.
Thank you, Jessica.
So, Brian, give me the sales figures that we got from 11/11 and tell me who are the biggest winners of all in this?
Okay, sort of different figures this year. I mean, this is just for Alibaba's Singles Day event. They racked up $75 billion in sales, but that's not just for one day. They sort of lumped up an 11-day period beginning November 1 until the 11th. Last year, they did $35 billion in a single day. But Alibaba said that $75 billion figure this year was a 26% growth year on year. And the biggest winners of this, lo and behold, are really the luxury brands and the well-known brands all around the world, like Nike, brands from Paris, like LVMH. This is just indicative of how huge the demand is for high-end products in China, despite the coronavirus pandemic.
Let me just make a point about the numbers, Brian, because it took them 11 days to get to 75 billion. It took them one day last year to get to 35, which is roughly half that amount. Does that tell us that there still is room for growth in Chinese consumer demand?
This is a sign that China is still growing, that a lot of people have saved so much money by not going out, by not taking trips abroad that they usually would. I mean, Chinese spend $330 billion a year traveling. So that's out of China. So all of that pent up demand, I mean, the money has translated into pent up demand for goods right now. And that's showing up in Singles Day.
On the same day that Singles Day occurred, 11/11, Alibaba also saw one of its worst performance on the Hong Kong exchange. Can you explain what's going on with regulators in China with respect to Alibaba? It seems like there's, between last week's IPO being delayed and this week's Chinese regulators kind of cracking down on Alibaba, that there's a trend here.
The target really is a long-standing practice, or one of the targets would be a long-standing practice in e-commerce, wherein companies like Alibaba would enter into exclusivity agreements with brands. And this has been going on for a long time. For example, if you were Nike, you want to sell on Alibaba, you cannot sell on JD.com, you cannot sell on any other platforms. And this is a practice that has been done to the detriment of the smaller players. And I think that by doing away with this and sort of scrutinizing it, actually fosters more competition, and it will actually foster growth of the industry longer term.
So the regulators don't want the monopolies to have these exclusivity agreements. Is that what you're saying?
Of course. I mean, there's one reason why you see companies like JD.com. I mean,
JD.com. Isn't that part of the business model, Brian? Isn't that why Alibaba is such a valuable company for investors, and some of its competitors are as well?
No. Alibaba is a valuable company to its investors because of its innovation. And exclusivity agreements is not innovation. Okay, that's just a crude tool to lock in the market. But now that you have a big clout in the market, innovation will shine through, I think. And look at this. JD.com is the second largest e-commerce platform in China. It has been doing its own Singles Day event since a few years back. This year, JD.com, they hauled in $41 billion in sales during that 11 period, okay, compared to $75 billion for Alibaba. That's up 33% year on year. And why is it significant? It's significant because JD.com, because they have these exclusivity agreements, right? You have this massive 1 or 2 week shopping event in China where everybody's anticipating it, instead of having it spread out over several periods. And you want your brands to get some time in the limelight. And by taking away these exclusivity agreements, you can now have JD.com say, okay, well, if Nike's going to be selling through Alibaba on Singles Day, I can come up with my own shopping event later on, maybe a Lunar New Year shopping event. Then you have a more spread out, more sustainable kind of e-commerce growth.
Okay, so you think there'll be an evening out of the sales, but But if you're an investor right now in Alibaba or JD.com or in Nike, or any other company that's getting a significant amount of its revenue from these events, what's your guidance to them about the way this impacts the value of their investments?
Well, nobody loves regulatory uncertainty, and that's what we got the first day. And the next day, they bounced back because they realized, well, it's not as bad as it seems, right? And they just, have to be, okay, let's see what China comes up with. But look, these companies, just these four companies, you got Alibaba, Tencent, Meituan Dianping, you got JD.com, and a few others like Xiaomi. They are China's champions, and they're uplifting China's stature on the world stage. I don't think China is going to cut the legs off of their ability to grow. In fact, they're going to nurture them and make sure that these companies are able to grow, but on at a more sustainable level, as well as the fact that these companies play a big part in China's plan to institutionalize investments. They want to embed these companies in the savings of the Chinese people, but through ETFs and stuff like that. So the last thing they want to do is cut off their legs.
All right, let's move to cars now, because we're also seeing some trends in Chinese purchases of cars. Sales rose 2.6 million vehicles in October. What does that tell us about the recovery in China and the potential for Chinese to buy and drive autos as opposed to taking other forms of transportation? We know there's an appetite to travel, at least domestically. What do you think about those numbers in terms of auto sales?
The big picture here, I think, is that when you look at what's happening right now in China, both Singles Day, e-commerce, car sales, you sort of have a roadmap of what could probably happen in the US. And if you use that as a guide, it could lead to some interesting opportunities. Just take cars, for example. I mean, it's already a given that car sales in the US are doing really well. Because of the pandemic, you have a shift to e-commerce sales, and most of that is going to be driven by people who just spending the money on other stuff they would have spent on otherwise. So expect those things to continue even for the US.
All right. I suspect that Alibaba is not out of your portfolio just yet. Brian Tycangco there from True Wealth Opportunities China. Ever the China bull. Thanks so much for coming in.
You're welcome.
And if you'd like to catch up with any more Stansberry research content, please take a look at all of these social media platforms where you can find us. That's all for now. Thanks for watching. I'm Jessica Stone.